Hey guys, first of all, Merry Christmas to you all. Now welcome back to the channel. I am Luke, your host, that big guy on the bottom left. If it's your first time here, we welcome you to the Gibson Hustle, where we discuss different hustles of business and investing with the main driver to build wealth over time. This playlist is basically a weekly portfolio update where I hope to take you on a journey to grow 50k into $1 million over a 10-year period. This is going to be purely in the ASX. I am currently using the quality at value methodology. This is episode 14, and unfortunately, we just went back from 69 to 68k over the last week. Alright, without further ado, let's get into it. Alright, to keep some structure to this video, you guys know the drill. We'll move through a few key areas. We'll have a quick overview of the QAV stocks performance, both over the last week and since inception. Then we'll have a nugget part where you should hopefully learn something new each week. Then we'll have the income and owner contributions, which will lead us to an overall portfolio value. And last but not least, we'll have that bonus sign-off quote. Well, I think it's about time I start to introduce something to benchmark against. I believe as we mainly invest in the top 200 stocks on the ASX, an ETF that tracks this would be relevant. And luckily we have one, which is XJO. I also checked and it is pretty in line with the All Ords. So how did XJO fare last week? Well, as you can see here, they were at 1.59% over the past week of trading, which is quite nice. It was a little choppy, but a nice bottom left to top right. So how did our stocks do this week? Well, unfortunately, we didn't look as healthy as XJO. We had Capral retreat by 4.3% from its massive gain last week, and IVE Group dropped a further 2.3%. Aurelia was up the 2.3%, which is nice, but our overall gain was negative 0.48%, comparing this to the XJO at 1.59%. Never fear guys, we'll come back for a fight on the last week of the year next week. Alright, so since inception, we have a pure capital gain of negative 0.32%. The capital gains just keep flirting with us. Next week baby, we'll be back in black. Portfolio still has a dividend return of 1.95%. This gives us a total return of 1.62%. Now for the updates on the list. Refer back to episode 11, about 4.5 minutes in, link above, for what the terminology for each buy, hold and sell means. So, Aurelia, Capral, Challenger and Clearview are all in buy territory. COG and recently IVE Group, Michael Hill, Medusa and Westgold are all a hold. And last but not least, Ingham's is still below the sell line. Remember guys, do your own research. Alright, today's nugget section is going to be about bears and bulls, which is from a question that was asked by Tom a couple of weeks back. We'll break this down and start with the first part. What constitutes a bull market and a bear market? Right, so most of my information will be sourced from Investopedia, along with some of my general knowledge and other sources. So let's start with the easy one. What is a bull market? Well, typically a market is termed a bull market when stocks are in favor and are moving upwards in the medium to long term. This is usually backed by an economy that is doing well. Both the market and economy are linked and move closely together. For example, when there is high employment rates in a strong economy, this means people have their hands on more money, which means that they have more disposable income to both buy the actual company's products, which is boosting profits, and also put money into the company's shares, both in turn pushing the prices up. On the flip side, a bear market is the opposite. Think about a weak economy. High unemployment rates, struggling to make the dollar last, people will be spending less on the products available from companies and pulling their money out of the share market to pay for their household bills and living expenses. Both of these factors depress company profits and company share prices. A bear market isn't realized as a true bear market until it has fallen 20% from recent highs. From an article I was reading, but using ASX numbers, our last true bear market was after the COVID cough of March 2020, where we had a drop of around 33%. The true bear only lasted about 3 months, which is pretty short, but it did take 14 months to recover. Compare this to the Dow, which was a true bear for a month, with 9 months to recover. Now the second part of Tom's question was about the QAV concepts, if they change during these market conditions. Now this is an easy one. The answer is really no. What we do is we try to stay fully invested during all market conditions. We keep following the methodology, looking for undervalued companies, investing, following our 3-point trend sells and real 10% stop losses. Think of it this way. If we were in that bear market during the COVID cough, how could anybody guess what the market would rally so hard after only being bare for a month. It would be better to have your cash in to reap the rewards on the strong recovery. Because let's be real, nobody can pick the bottom of these bears, and that's what the 10% losses protect us from on the way down. Now the last part was about the new market term called a rue market. Look, I'm sorry mate, it must be tongue in cheek as I couldn't find much info on this one. But thanks for the question, and if anyone else has something else they want to deep dive on, leave us a comment below so we can all get more educated together. Alright, so our cash account is still at the 4479. So with our 4479 in cash, plus our 64354 in stocks, takes us to an overall value of 68,833 bucks, which is about a negative 0.44% total portfolio gain from last week. It's all good in the hood though. It's only wiped out half of our gains from last week. Well, that's a wrap, guys. Please make sure you guys hit that like button, subscribe if you haven't, and tickle that bell to get notified when my weekly updates come out. If you want to see anything else in the playlist, please just leave us a comment below. I'll make sure I reply to you all. Now, I hope you all have a lovely festive season and keep safe. And you guys all know the saying, keep healthy and wealthy. See you guys.